Okay, so coding this up shouldn't be too hard. Let's just first look at how we can identify this ranging stock, because honestly that looks pretty hard in terms of programming, right? If we look at this full screen, a human can instantly see that this is ranging, right? But the 200 MA, if you make it even slower, it's going to not pick up on a lot of trends. It's just like when the price is already going up like this and the trend's still like vertical, well, you know, you can obviously, any human would assume this is going to keep going up, right? You need a very clear indication that's going down before you assume that that's going to happen. So really, if I slowed it even further, then it's not going to pick up on that. But really, if you just look at chunks of the market, right? Let's say you just divide it into month-long chunks. Or let's say week-long chunks. I don't know why these dates are different. 15, 17. Oh, these are weekends and weeks, right? Okay, so these are the open weekdays. Let's say you just take a week like this, and you take a week like this, and you take a week like this, right? And it's like just taking 1 week, and you take the MA difference, right? So this is a difference in the same MA between two different periods of time. So that's different from MACD, but obviously there's similarities, right? If we look at that, right, especially if you consider the week-to-week basis nature of this, right, we have an intuitive sense of when market conditions have changed, right? The algorithm doesn't. You will have to tell it when it has changed, right? So here, for example, if you look at the past 3 weeks, it was like boom, right? Boom. Definite uptrend. This is like vertical, vertical, vertical. Even though if you use slope, then you're going to get indicators here saying, yeah, this is a good time to trade RSI, man. Perfect. Yeah, we have a really strong trend looking at the MA slope. So you just take the MA at period 0 minus the MA of period -1, then you get the slope, right? If you calculate the difference, right? Honestly, that doesn't really work that great, right? So obviously that is a measure of time, right? So you divide by 1 bar, so it's divided by 1, that's the same. You just get the slope immediately. So I hope that makes sense. Anyway, so if you look at the 5-day MA difference, for example, in this case that might be well over 100 bars, right? You just get a more intuitive grasp of what the trend is like. Now, of course, the internal question is, can we make sure this doesn't lag too much, right? Even on a week-to-week basis, if I just look at the week-to-week basis, right, and when I would be trading this intuitively, right? Okay. So, for example, here, right, it's 15th to the 20th, right? This was, if I drew this line straighter, it was definitely ranging down, right? It was ranging like this. So if you, in that case, just went RSI and nothing else, that wouldn't really work, right? You would want to trade little pullbacks like this, right? But you'd want to have a position going down and scalp it when it's oversold, right? For example, here, it's too bad that here, somehow this doesn't give us an oversold bar. I don't really know. I think this is because this is our text. But look at this, right? If you just look, again, this is another problem with the strategy, right? This is obviously oversold here, and we would obviously be able to scalp it to back here, right? It's what a human can do and a machine can't, right? So I either need to use pyramiding, or really it doesn't matter, right? We'll just look at that later. Point is, this RSI indicator is very valuable in liquidating our position temporarily and piling back on in a second. Also, what we want to look at, so we already talked about the weekly thing, right? Another thing to add to that list is that if this is not above 70, let's look at what that value is, right? So look at over here. This is 65. This is 51. Honestly, look at what it's doing. During these periods of a strong trend, right? It's spiking up and down very hard. For example, so if I just let me just cover this up, right? I'm just gonna like draw over it or something, like, right? I don't know what's happening here. I just know that it's doing this, right? So what happens when it's oversold here and then it spikes up like this? As soon as this is going down, I mean, come on, this was one straight bar up, right? It's just reaching higher highs and suddenly it's dropping, right? That is a scalp. That is when you end the scalp, right? As soon as you see, this is what these good scalp traders see. They notice when it's just like going like this and when it's like actually slowing down a lot further, when that magnitude is bigger. They notice that. They have level 2 information. They see where little blocks of resistance are before they actually get there. You know, this is all about scalping and getting that right. So if we want to trade that, we're going to have to use that, right? And get the technical aspects of this right, as in the execution on a particular platform. But that's not really our problem yet. We're just here to find patterns, and then later we'll see what and how, right? How can we implement that on a platform? Even if, let's say, if the algorithm just gives you a heads up and you trade it yourself because the algorithm can't do that. I mean, who cares, right? Fine. Doesn't matter. All right. So here, just one more interesting example. I see overbought here. That's a very complex one because this is another pattern which we haven't talked about, namely that it's breaking through the MA line very cleanly. And now a breakthrough through the MA line can be seen as sort of strong reversal indicator, right? So then that is something, this is an error rate over simple trend strategy, and we could try and refine that if we add some sort of like reversal indicator that looks at what kind of lines have been broken, if it's been breaking through the 200 MA line. For example, here it didn't really manage to break through, but honestly, I wouldn't want to trade that, right? There's so many consistent patterns where you just know what's going to happen. You know this is going to pull back, go down, pull back, go down, right? And then after this, it pulls back and price just sort of consolidates, right? So I've made 1, 2, 3, 4, 5, 6 successful trades here with very tight stop losses, 100% win rate. Why would I trade these murky sort of, you know, I don't know what it's going to do kind of trades, right? Okay, so okay. So I guess that's another important aspect of the RSI in general, is that it tends to spike really hard and correct itself. So we can look at what it does when it spikes really hard, right? The harder it spikes up, the harder it tends to spike down. The more it consolidates, the more it tends to consolidate some more, right? If you look at this, for example, it consolidates some more, and eventually it spikes, right? After it spikes, shortly after it spikes again, right? So generally you have like a little period of consolidation, and then a spike, and then a smaller one, and then spike, and then you know, period of consolidation. So you can see general patterns in that as well that you can benefit off of, simply because you know that, let's say you got a position here and you went over here, you know to liquidate it, right? Whether or not this reached above 70, it's just clear to me, like here as well, right? When this is spiking down, if you're in the green, I would liquidate that because it's probably gonna go down, right? It went all the way down here, and it takes you a lot of time to recover from that. Time aspect is another aspect we can cover in another video, but that wouldn't work for me in real time, right? If I'm day trading, scalping like that. Okay, so I hope that's a useful video that explains some of the more intricate aspects. I haven't gotten into the coding. I will do that myself and report back in another video, but for now, emphasis on how can you identify trend, what kind of indicators can you use, how can you code it up.